What is going on, Empire? So this is just going to be an update, pretty much a pre pre prep for the Reserve Bank of Australia's rate decision that's going to be at 12:30 a.m. Eastern. So we're gonna host. I'm gonna host that live. Most likely, we just focus on that. We don't have anything happening over London session until 5 a.m. We do have Euro CPI data. Um, I do want to be up for that as well. Like at least I would give you tradable opportunities after the rate decision, just in case, you know. But this right here is just going to be on the Reserve Bank of Australia. All right. So I just put here, I just try my best to just give you what to look for a dovish scenario and a hawkish scenario. Okay. Just so that we could pretty much be on the same page on what to look for. All right. So dovish outlook. We trade rate decisions all the time. So we know that it's just keywords that we just look for that could give us the bigger picture of their forward guidance, pretty much, right? So the market expectations for this meeting is likely to be a hold. So they're going to leave rates unchanged at 4.35%. But just to throw it out there, but you know, if they do a surprise cut, right, that would most likely be a sell automatically. You're just going to see the AUD currency sell off drastically if they cut rates. The same thing if they hike rates. If they hike rates unexpectedly, most likely we're going to see a major shift in AUD strength. Okay. So I just want to say that just so, second, guys. Yeah, so I just want to say that just so that you could get that understanding as well. Write that down for your notes when it comes to the possibilities, you know. So right here is the dovish outlook. If we get a hold, right, then we need to pay attention to their forward guidance, meaning what is their expectations on inflation, right? Their expectations on labor and their expectations on GDP, which is growth. So if we want a dovish outlook, meaning we want to see a weaker AUD currency from this meeting, we would like to either see a hold, most likely is going to be a hold with inflation expectations declining. They see the progress of inflation coming down. They comments are leading towards the labor markets that the labor markets is easing, or they're expecting worse or job numbers, or they show us the table that their expectations moving forward, that labor and inflation is actually easing off. Also, GDP, if their expectations on growth is decelerating, they're expecting Australia's economy to continue to decline. We want to see if the forward guidance, when it comes to their comments, especially the press conference that happens after the rate decision, we want to make sure that his comments is actually dovish, right? We want to see if he comes out as talking about the decline of inflation. He's talking about the labor markets is easing off, GDP is coming down, especially what he says about the possibility of rates. If he says that, they pretty much cut out rate talks, there was no rate talks. If he even says that, we're confident that the trend of inflation is coming down, that there's time for us to start normalizing policy, anything regarding a dovish tone coming from his comments, that should lead to more AUD weakness. Okay. Now, the pairs that I'll be looking at, most likely, I like to look at AUD JPY, but when it comes to that time, we could look at price action for the AUD pairs, then we can make a good assessment during then. But this is just like a little thing that we could just look forward to. And now this is the hawkish outlook. So pretty much everything is just the opposite, right? So we want a hawkish outlook, right? We want to see if inflation, labor, and GDP, we want to see if their forecast for it or their expectations is actually rising, or it's still high, or if it's still the same, right? Because if they didn't change anything, they was pretty much already hawkish last meeting. So if they leave everything the same, that is still a hawkish outlook, okay? But we want to see everything the opposite. We want to see that their tone on inflation is they're still concerned. Being concerned is what is caused, that pretty much means that inflation is still higher. Rising job numbers, expecting the labor markets to still be tight. GDP expectations of growth is still solid. If their forward guidance is hawkish, meaning that they're, like I put there, leaving comments the same, or if their expectations to leaving the doors open for any possibility, meaning, you know, they're still opening the doors for possible hikes or cuts. So that's the reason why AUD was stronger last meeting, because of this comment. It's just not, they're not saying it pretty much black and white like that, right? This is pretty much the statement that you could get the monetary policy report. And we just scroll to the bottom. See, the outlook remains uncertain. The path of inflation on its return to target is unlikely a smooth path. So that's what I'm saying. Uncertainty is just what's causing them to stay restrictive, right? That meaning that they still have more work to do. So it's just right here. The time frame remains uncertain at the board is not ruling anything in or out. The fact that they're saying that, the markets is going to take that as not ruling anything in or out. So we need to see if this statement changes right here, because if they're still opening up the possibility that rate talks is still a discussion, that is the reason why the markets is going to look at that from a hawkish standpoint. Okay, because even if like if inflation is coming down, but if they're still leaving the discussion for rate hikes on the table, that's what's going to give us that more restrictive or hawkish reaction that we want to see for the AUD currency. Like, look what happened last week with the Federal Reserve meeting, when Jerome Powell makes it clear that we're not going to hike rates. Right? They make it clear. So the fact that they're not going to hike rates, it really doesn't matter at a point if they're restrictive or not. Look what happened to equity markets, right? Just because you know that in order for equities to drop, you need to do a hike. And if you're taking that completely off the table, then that pretty much opens the doors for us, right? That then we could probably start switching our stance to more of a dovish outlook. So this is what I'm expecting right now, is this comment right here, in or out. I want to see, we definitely have to see if this changes. So if it changes, then good night, buddy. If it changes, then that would be something that could give us that opportunity we would want to look forward to. Okay, guys. So just something just to be aware of. I just want us to look at this statement right here, in or out. This has to change. All right. And I would definitely send this into the chat as well, so y'all could go over it. All right. So this is pretty simple. AUD, JPY, AUD, USD. We're expecting strength to come in board if we get this hawkish scenario. Okay, guys. So now I just want us to take a look at, now let's take a look at data, because the data is what's really, the trend of data is what's really going to determine what is their expectations, right? So we need to know, like, how's the trend of inflation, how it has been lately. So we can see that the yearly, right, yearly head CPI has been pushing to the downside, nice deceleration. But when we look at the quarter CPI, we can see that this is still the problem right here. We can see that definitely we can see that this year is still high. We're not seeing that deceleration coming in yet. We can look at wage prices as another inflationary indicator. We can see that this is not decelerating this year quickly to the downside. We're not seeing a trend to the downside yet. Wage price quarter, this is what's actually giving us a good decline. Now let's look at the other CPI data. We can still see that this is still stagnant at 3.8%. We're not seeing it decelerate quickly. We're not seeing that decline in data, right? We did see it all the way from back here, but we're paying attention to now. They want to get that closer to 2% as possible. We're just not seeing that deceleration yet. What is this? Yeah, the CPI month to month, very choppy. You know, not that trend that we want to see pushing lower, but we're still in a comfortable range. You can just see that it's just not a trend to the downside, but very comfortable. But unemployment now, this is the labor data. We want to see this trending to the upside to see growth. Labor is decelerating, right? We're not even seeing that neither. We hit that 4.10%, then we actually went down to 4.0. We want to see if this can continue higher, but the labor markets is not showing any easing as of yet, from my opinion. GDP is definitely, we see this declining. You know, this is a good sign of slowed growth that we're seeing GDP overall. But looking at the data at the moment, right, we could just look at this right now at the moment. It is a higher probability that they could leave everything to stay. They could stay restrictive, right? It's a possibility that they could come out this meeting and say, we still got work to do, right? And we're going to keep policy at these levels until we're confident. We're going to play, they're probably going to play that tone, what the feds do. We're going to play that, they're going to probably play that tone about staying restrictive, leaving the policy for restrictive levels. We need more work to do, that they're not confident yet. I think that's going to be the play for this meeting. It's a possibility that they're just going to leave everything the same, which could lead to this meeting being a dud, just to throw it out there. Like, that's probably one of the expectations, right? Is leaving this meeting a dud. But, we just got to play it by ear. I think that I still believe they still have more work to do. My opinion, I think the Reserve Bank of Australia still has a lot more work to do. I think that they want to see more evidence on making their next move. Most likely, they're going to probably not cut rates this year. I don't really see it the way how things is going right now with data. I think they're going to still be data dependent, right? And they're going to keep rates higher, restricted for longer. I think they should play that stance if they do. But if not, then we could take advantage of that opportunity as well. All right. But this is definitely something really good to look at just for those expectations. All right. And like I said, when it comes to the currencies, when it comes to trading, we're going to focus on that later for the rate decision. Right. We like pretty much like what I like to do is like have my AUD pairs right here, and we just focus on AUD pairs, and we go from there and we look at what to trade. All right, guys. But this is just a prep. And see you guys for the rate decision. Have a good one. Hopefully this is helpful for you guys. Hopefully it makes sense. If y'all have any questions, do not hesitate to reach out.